evening, everyone. Welcome to another live strategy session with Jeff Hopkins. If you notice my voice is a little different than normal, it's because I am not Richard. This is Greg Ward. Richard wasn't able to attend tonight, so I am breaking it open. Further ado, Jeff, you're there?
Hey, yeah, thanks, Craig. Welcome, everybody. Big thanks to Craig for filling in for Richard. He had a school event with his daughter tonight. May be joining us here shortly. Let me flip on my video. So welcome, everybody. Great to see you all on tonight. We've got some new members with us that joined from last week, so welcome to all of you. Pleasure to have you guys on. We're going to be talking tonight about a few different things. We'll start out with our market overview and then go into some current trade trend buy and sell signals. So before we get into that, I'll read you a quick disclaimer. Altos Trading and TradeTrend and the Zillion software is intended to be used as an information service for subscribers, and it includes opinions of buying, selling, holding various stocks and other securities. However, we are not we are not brokers or investment advisors and do not provide investment advice through our educational events or our software or in the light of any particular investor. So for that, we don't obviously accept responsibility for any decisions made by subscribers using our software or any of our educational information. And of course, anyone who attends our educational events or uses our TradeTrend or Zillion software and decides to buy, sell, or hold securities should do so with caution and consult with a broker or investment advisor before doing so. All right. So as I mentioned, we're gonna start out with our market overview. We're gonna map out some key levels. We've seen a little bit of a pullback in the markets. We've got CPI coming out tomorrow. So we'll have a better gauge for what inflation looked like in July. So we might see a bit of an uptick in volatility in the markets tomorrow. So be aware of that. But we'll take a look at the levels that we want to be keeping an eye on for tomorrow and the rest of the week. And then we'll quickly review the 36-month moving average. It's still panning out the way that we've anticipated and analyzed over our past weekly sessions. So we won't spend a whole lot of time on it, but just want to briefly revisit that and kind of talk about where things stand for August. And as I mentioned, we're going to get into some current trade trend signals on the Zillion platform, talk about how we scan for those and analyze them. Most of our members on hey Rich, greetings from the Indianapolis area. I just lost my train of thought. So kind of like look at what the current signals are and kind of how we analyze those in various market conditions. So obviously we'll look at those tonight based on what market conditions are currently. And then we'll open it up to our ticker roundtable. You guys can share your favorite symbol and we can take a look at those and run the technical analysis on them, as well as look to see if there are any trade trend signals. That's what I was going to say. There, a lot of you are probably trade trend or Zillion users, particularly those that have joined us from last week. So we'll go a little bit into how to read the signals. If you decide to take a trade off one of the signals, how to do that. So, and then we'll wrap up with Q&A. If you guys have any questions in the meantime, you can post those in the Q&A box. So that would be found, usually it's at the top or bottom of your Zoom screen. If you just hover your mouse over the top or bottom, you'll see there's both a chat and a Q&A. You can also, type things into the chat as well. But if you have any, strategy related questions, please put those in the Q&A. That's the one I'll be watching for questions. And then Craig will be fielding the chat as well. If you guys have any like account related questions or need help with anything outside of what we're discussing. All right, so I'm going to go ahead and flip my video off here so it doesn't block anything on our screen, and we'll get over to our charts. All right, so as I mentioned, we've had a bit of a pullback in the markets. Let's actually start by looking at, so this is our Zillion platform for those of you who aren't familiar. Let's start by looking at kind of we have a proprietary algorithm that gauges risk, overall trend, and buy sell ratios from our TradeTrend algorithm across the symbols that are in our database. on the Zillion platform. So let's kind of start out by analyzing those, seeing what they're telling us, and then we'll map out our levels and then dig a little bit deeper into signals and then get into some tickers you guys want to take a look at. So we've had a big rebound and run up in the market, right? This is a daily chart of the S&P. Zoom out there. Didn't quite have a double bottom, but we kind of had this inverted head and shoulders pattern. And we've had this kind of parabolic run up with not much of a pullback since the reversal back in mid-July up into a resistance level. And so we're going to be looking at that level here shortly. But when we look at the risk in the market, what the current trend is telling us, and we'll look at that in the context of these support and resistance levels, and what the overall buy-sell ratio, and that basically is telling us, looking at the buy-sell signals from our TradeTrend algorithm, how many of them are buys versus sells, and that's what you see in the gauge up here. So things are kind of in the mid to low range right now across the board. Risk has subsided in terms of implied volatility. So we're still in the mid range of the risk gauge, but it's decreased, over the past several weeks as markets have rebounded, but it's still not in the low range. And we may see it tick up if there's a continuation of a rotation lower from the resistance level that we'll take a look at here momentarily. Trend is also in the mid-range, but more towards the bearish side overall. And our buy-sell ratio, same thing, mid-range, in the mid-range of the gauge, but we have more sell signals currently in our database from the TradeTrend algorithm than we do buy signals. All right, so overall things are kind of tilted towards bearish sentiment. And I think that will kind of become clear as we look at the key levels that we're monitoring. So again, this is a daily chart of the S&P 500 index, the SPX. So make this a little bit easier to see. So let's take a look at our key levels. Okay, so these are support and resistance levels, and ones that we're going to want to watch very closely over the coming days and weeks, because as we get down into individual assets or equities or ETFs or anything that we're considering trading, as well as potentially index products like the SPX or the NASDAQ NDX, we want to start with a top-down approach and get a gauge of the overall market sentiment and key levels on the major indices before we dig into the same or similar analysis on individual securities. These often, as I've mentioned in past weeks, are not exact levels, but more zones. And for those of you who are new with us this week, we focus heavily on what we call century marks. And that's one that I just, annotated here is a 4,200. So a century mark is simply a 100 level, 4,200, 4,300, 4,400, moving down 4,100. And we have millennial marks, 4,000. So this would be a millennial mark right here. And we look at these regardless of whether there's any, necessarily any significant price action around them. Often we will find very significant price action around these century mark and millennial marks. And then we also look at half century marks, like 4150 would be an example, and quarter centuries, 4125, etc. So we're looking not just at the century mark levels, but we're looking for actual price action around them and confluence between these two things. And we see that at the 4,200 level, which is, again, the one I mapped out here. This is a resistance area, but also mention that it's kind of more of a zone. So price doesn't necessarily have to touch that exactly. We're just looking for some sort of a reversal off of that level, whether it's to the upside or to the downside. So what you'll notice here is that right around this 4,200 century mark on the S&P, we have what was previous support. So from back in February and March, we see price coming down into this level and then moving up off of it, right? And we want to analyze and gauge the magnitude of those moves, how many times they occurred, and things of that nature. And then also, being that this was a previous support level, because price was moving into it from the upside, and then reversing off of it back to the upside after the price moved down into that level, that makes it a support level. And support and resistance are often broken. So when they are, typically what we see is if in this case, like this, what was a previous support level is broken, as it was right here. Let me demonstrate here. There. So right, we have a break of this 4,200 century mark support level. Price will often come back up into that level and retest it. And more often than not, especially if price stays below that level, in the case of a prior support level, like we're looking at here, if it stays down below that level for a significant period of time and even goes into other lower levels of support, it will often come back up and retest, and that will then serve as resistance. Okay, so that happened right here, right? And then you'll see the rejection in the rotation lower in the S&P. So we're looking for prior levels, in this case, when we're analyzing resistance, prior levels of support that were broken and then retested. All right, and so it's a really important exercise, and I think methodologies you incorporate into your analysis and strategy, because often these levels, and it just happened again yesterday, serve as the market really never forgets them. They serve as support or resistance, often days, weeks, months, or even years down the road. So they're very important to keep on your radar. And generally, like I'm on my own charting and broker platform, I map these out and keep these here so that I can continue to be aware of them and use them in trading decisions. So we had a rejection off of what's really more of a resistance zone, because again, price didn't come up exactly to 4,200 and touch it. But as we visualize this, we can see that, and I'll just draw the kind of the lower edge of this zone. It's a pretty tight zone, right? But we can see that kind of right around 4175, so that's a quarter century mark, and 4,200, we've got all of this price action reversal taking place, right? Moving down into the zone and buyers coming in and pushing price higher off of it, breaking through the zone, driving prices lower, and then coming back and retesting again with a big rotation lower. And then also we've got, again, a move back up into the zone just recently in the last couple of days, and another rejection of that level. So this zone between around 4175 and 4200 is going to be a very key one to watch this week as core CPI comes out. We have a better gauge of what happened with inflation in July, and also to take into consideration when you're forming trade decisions on individual assets or equities based on what's going on in the broader markets. So so let's keep an eye on this resistance zone. And let me just make sure that's clear. So this is resistance. All right. And then we've got support. This one's a little trickier to spot, but support down around the millennial mark of 4,000. And we've got some other support I'm going to map here. But you can see here we've got areas of support and resistance. Again, right here, there. So see how there's all these instances on this is again a daily chart. So on these particular trading days where it's a little bit, it takes some practice and analysis to spot them, but we've got a lot of rejection right around this millennial mark, 4,000. So if we get a rotation lower, that's what we're going to want to be looking at for a market rebound back to the upside, right? So right now we're at a resistance level. So our expectation is if that level holds, price comes lower into support. If resistance is broken, so it goes the other way, just like I mentioned with support, where this was support in the past and then was broken and became resistance. If resistance is broken, then it, assuming it's not a false breakout, then becomes support. So if we can get through, and we talked a lot about this, I think in last week's session, breaking through the previous resistance zone, which we did, and then we came back down and retested. Past couple of weeks, we've looked at that, this 4,000 millennial level. So if that happens here over this week or the coming weeks, and we break out to the upside, our expectation is price comes back down, and then this what was and currently is a resistance level or zone becomes support, and that can create potential buying opportunities for us, right? So hopefully that this is becoming clear how we use these and how you can use them to identify buying and selling opportunities. So we use resistance for selling opportunities and support for buying opportunities. So let me just kind of clear things out for you. Again, for this week, we're watching the resistance zone here, and then what is price going to, so far it's rotating lower off that zone, but what is price going to do? And then where's our support? So some of the closer levels of support that we might encounter this week reside right around the 4,100 century mark. Okay, so that might be one that we're more likely to encounter. And let's actually look real quick at we can use the options statistics to determine the likelihood of us touching this level. It's probably fairly high, but you'll notice here, I already circled that one. There's a lot of past support or resistance around the 4,100 century mark. All right, so what we might see happen tomorrow is we could see price come down into this 4,100 level. And if we get buyers coming into the markets around this level, we could see a reversal back up as well. If we get a strong close below 4,100, I expect we'll see a rotation lower into the 4,000 millennial mark. All right, so let's see actually what the probability of touching 4,100 this week is on the S&P. Let me get my options chain up here. So I'm just going to type in SPX, and you can run this exercise for any security that's optionable, that has options that trade on it. All right, so let's see. Friday's August 12th, right? So we're going to look at the August 12th expiration, and we want to know what is the probability of the S&P coming down and trading. So in other words, price touches the 4,100 level. And we can do that by analyzing the options chain and using a statistic called probability of touch. So if we want to know what the chance between now and Friday of price touching 4,100, we look at the probability of touching, right? And that is, as I anticipated, quite high. It's about 80%, almost 80% chance of us touching the 4,100 level. All right, and then we can also see what's the chance of us closing below 4,100. So we use probability out of the money. So the chance that the 4,100, and that would actually imply that so we'll use the opposite percentage. Okay, the S&P closes above 4,100 because it's the probability that the 4,100 strike price will be out of the money. In other words, the S&P trading above 4,100 by Friday is 60%. So inversely, there's a 40% chance that between now and Friday, or by Friday, I should say, the S&P will close below 4,100. So there's a greater chance we're going to close above 4,100 by Friday. So what does that mean? How do we interpret that? Well, there's a greater chance, and that's again why we map these levels out. There's a greater chance that 4,100 is going to serve as support and hold if we trade down into this level. All right, so that's why I'm saying we want to watch this week and see, does this 4,100 level hold? If it does, and we get evidence of price action rejection of 4,100 as support, we may see a rotation back up into resistance around the 4,200 level or zone, and then we want to see if that breaks. But see how we can use these option statistics to, in combination with our levels, to determine probabilities of price, going one direction or the other, or a support or resistance level holding. Okay, so that's the S&P. Let's quickly take a look at the NASDAQ, and we'll use the Qs, the NASDAQ 100 ETF. And similar picture to the S&P, the SPX. We have a rejection off of the major resistance zone. All right, so this zone's right on the Qs is kind of between 320, 325. All right, so notice how we had prior support here. Okay. And then we have, again, a rotation lower off this resistance zone. There's a resistance. All right. So in order for me to consider this a future buying opportunity, I need to see price move to the upside out of this zone. I want to see a close above the zone and a retest of that to turn it from resistance into support. Okay, so that hasn't happened yet. If we stay below the zone, and so far we've now closed today, closed below it. We closed yesterday within the zone, but now we closed below today. So it's still resistance. And now the expectation is if we move back up into this level, there's a greater probability for a sell-off in the NASDAQ 100. So that's what we're watching. But if we can get back up into this resistance zone, there's a greater chance it will turn into a support zone. And if we get a close on a daily basis outside of this zone, again, we're looking for a rotation higher. All right, so that's the NASDAQ 100. And let's now look at the CBOE volatility index, the VIX, and see what's happening here. So we've had a major rotation lower in the VIX, meaning that volatility in the market has come down, and we, not surprised to see that as the S&P moves higher, the VIX tends to move lower, to retreat. And my sort of, I guess, method for determining if we're in volatile market conditions or not is by using the 20 level on the VIX. So if we're above 20, there tends to be, there's obviously higher implied volatility, and we might expect a potential market sell-off if we stay above 20. Again, so we're using that as a support level right now because price is above 20. And if we can start getting more of a series of closes below the 20 level on the VIX, then the anticipation is that volatility is subsiding and that prices in the major indices like the S&P will resume an uptrend. So what we want to see, and why we use the VIX, is we want to see the VIX retreat as it has been, right? And again, there's an inverse correlation. So as we see the VIX come down, as we looked at on the S&P chart, we saw the S&P going up, right? So inverse correlation. And so we want to see the VIX close below 20 and start to trade below 20 and move lower while the S&P breaks through a resistance level. And that's the confluence we're looking for higher probability, upside moves in the market, right? So that's how it all kind of comes together and how we use that information and analysis to make trading decisions on individual stocks or on options plays and things like that. All right, so I'm going to pause there. If you guys have any questions, please let me know. Now's a good time to pause for questions and see if anything's come through. Craig, if you want to let me know. If not, we can continue on. And if you guys think of any questions, you can pop those into the chat or the Q&A.
No questions right now. You've kind of been answering them as they've been coming in, so it's worked out really well.
Perfect. All right. Well, don't be shy, guys. If you guys have any questions, please let me know. Don't want to lose anybody. So, all right. So that's our market overview and the key levels we're watching. Let's also quickly take a look at the 36-month moving average. We've really called this one nicely, going back many weeks, really a couple months now, because I think we brought this up first time maybe a couple months ago. Is price was moving. This is a monthly chart now of the S&P going back 10 years. We've talked about how price often uses the 36-month moving average as a mean reversion and bullish reversal area. And so we've been watching it closely because price obviously had moved far away from the 36-month moving average from previous all-time highs late last year, early this year, and found support there. So this is what we call a dynamic support area, and has moved off of it. So that has created some buying opportunities. I came in, used this 36-month moving average as well as some other methodologies and strategies and analysis to come in and buy some of the major index products like the SPY and the Qs when prices were down lower as we rotated off this 36-month moving average. So right now I currently have long positions in the SPY and the Q, but I got in at lower prices as this mean reversion and reversal off of these levels were taking place, using all the strategies that we've looked at tonight with horizontal support and resistance, dynamic support with a 36-month moving average, as well as other things. So again, those are kind of all emphasized and laid out in detail in past weekly sessions, which you guys can review in either the members area on our YouTube channel. So we're kind of stalling this month so far. I mean, we're not quite midway through the month, but we've moved up again. And then again, we found this 4,200 level as resistance, and we've had sellers come in around 4,200 and push prices lower a little bit. But this is a monthly chart, so this is more of a long-term, look at what's happening on the S&P. As you can see, the previous test of this 36-month moving average that occurred, this was the Corona crash back in early 2020. So this was occurred back in early 2020, February, March, this test of the level. But you can see there was a very significant and sustained and strong move up off of this moving average. And so I don't necessarily expect that we're going to see an up move off this level or this average to that degree, but important to be aware of and use, again, is our top-down approach to analyze market sentiment, market direction when we are executing our trading plan and determining how to trade individual assets like equities and ETFs. So we'll obviously continue to keep an eye on this, but as long as we continue to see closes above the 36-month moving average on the major indices like the S&P and the NASDAQ, that's a good sign. So again, we'll monitor this in case conditions change and there's another rotation lower and particularly a close on a monthly basis below the 36-month moving average. Boris is asking, if we're still in a bear market, how high do you expect the bear market rally to go before it turns south again? Good question, Boris. I don't, I try not to have any real expectations. Not to say I'm not trying to be proactive, but I have to be reactive to some degree because we kind of have to let the market tell us what it's trying to do. But I think this 4,200 century mark on the S&P is going to be a bit of a significant one to break through. So you'll see in prior months where it served as support and then was broken in April, and then served as resistance, right? And then resistance, and then resistance, and now this month resistance, right? So we're getting, this was also support here. We're kind of like in a ping pong game. We've got the bulls and the bears playing ping pong around this 4,200 level on the S&P. And we've got, so far, this month isn't complete, obviously, but we've got an equal number of months using this 4,200 level as support as we do resistance. So I think this month is going to be really key to watch if we can break through it. If it can't, and we see a rotation lower, then Boris, I think, this 4,200 level could continue to service resistance, and we might see a retest of the 36-month moving average. But again, if we can break through 4,200, particularly this month, that's going to be bullish. And I think I would even go as far as saying it's not a bear market rally. It's we're out of the bear market, and it doesn't mean we're going to go into a strong bull market or even a decade-long secular bull market, but it could be enough for me to make a call that we're out of a technical bear market. Yeah, no problem, Boris. Thanks for the question. Okay, so let's see. So what I would like to do now is kind of go over some current signals with the TradeTrend indicator. And we have, so this is our Zillion platform that we here at Altos Trading in partnership with tradingindicators.com have developed that, again, includes a number of different tools, commentary and events, where we post different significant market events and commentaries, market sentiment gauges, short, medium, long-term trends across major indices, top and bottom performing sectors, scanners, watch lists, basically a suite of tools to help with your trading and investing decisions. And one of those things that's built into it is the TradeTrend indicator, which many of you, if not most of you, or not all of you, have. It may not be on the Zillion platform. We provide the indicator on a suite of platforms as well, like NinjaTrader, TradeStation, Thinkorswim, TradingView, etc. And so the symbology might be a little different on the chart, but the information should be basically similar or the same across multiple platforms. So just know that as we look at these, we're going to do it off the Zillion platform, but it might look a little bit different on your charting platform, depending on which platform you have TradeTrend on. So what TradeTrend does is it gives us anticipated buy or sell directional moves in the market with a suggested entry price and then a trailing stop if we hit the entry price. So what we can actually do, and let's just run a scan. I'm going to take futures out. I'll just kind of run it across the majors. We have a lot of, if we select all assets in our platform, we have almost 5,000 assets or symbols in our database. So we're not going to look through all of them. Obviously, we'll just take out futures, maybe take out cannabis, and we can just let's take out other, keep the rest of them in. So we're still looking through about 650 symbols, more than enough to find opportunities. And then we can scan and sort by different, potential signals. So currently, by doing our top-down approach and mapping our levels on the major indices, we've determined that we've rejected this resistance zone, and we've rotated a bit lower. We've analyzed our gauges and seen that there are more sells than buys. There is a bit of a neutral trend, but more to the bearish side. So we may want to, potentially look for pending sell signals, right? And so we can sort by those. And we actually had one on the S&P, and we can go back to that, right? And we had two. This one didn't trigger, but let's just start looking at the S&P. So what we tend to look for are these signals off of a key level. So we might, for instance, in this case with the S&P, and we're looking again at it just purely at a daily chart, a sell signal off a resistance level or zone. So we had mapped out this resistance zone right around quarter century mark 4175 to 4200, and we've got a couple sell signals. This one didn't trigger. So these diamonds are, if it's above the candle, is a sell, a pending sell. In other words, the algorithm is anticipating a move down. If and this is, again, the symbology might be a little bit different on whatever platform you have the indicator on, but if the diamond's below, the algorithm anticipates a potential move up. There has to be follow through, right? So this particular one, going back 6 trading days ago, was a sell. And then that signal is good for up to 3 candles. So in the case of a daily chart, for the next 3 days after the signal comes in. So the entry would have been below the low of this candle. I'll show you where you can find that on the Zillion platform. Most of the platforms we have the TradeTrend indicator available for will provide that number on the chart. Usually it'll be up in the upper left corner of the chart. And so in this case, there wasn't enough immediate follow through. So there was no triggered signal. You'll see, like in the case of a previous sell warning. So on this candle here, see the white diamond above, and then the entry below the candle, there was an actual triggered sell. So price did follow through and come down through and then rotated lower. That didn't happen in the next 3 days or 3 candlesticks following this one. So if we had placed the sell stop order with this particular sell signal after the 3 candles with no follow through, we would cancel the order out. But we got another one today. So the sell stop, if we were to take a short trade, would go below the low of the candle. Again, I'll show you just here in a second where you can find the actual entry price for a short setup, and same as where you'd find it for a long setup as well. But we've got a couple sell, so the algorithm is picking up, potential short opportunities, and then we've got this resistance zone, right? So again, we want to look for these signals off of these key zones or levels. So not a recommendation or advice to take a short setup here or a short trade off the setup, but just kind of running through the process and what we're looking for. And again, why we start with our top-down analysis of the major indices. So again, this, of course, is the major index of the S&P. So what you'll see if we minimize the chart, get back to the main dashboard. So we've again got the sell signal here today. There's the entry price. So on the Zillion platform, and again, a lot of the other platforms we offer TradeTrend on, you'll find it kind of in the upper left of the chart, or on like TradingView. If you have it on TradingView, it'll actually show up right by the candle. But you'll notice that we've got our suggested entry price if we were to take a short signal. In this case, the algorithm is suggesting an entry to the short side of 4106.05. 0.04. So this, of course, is algorithmic and doesn't involve any human discretion. One thing I'll say is that remember we talked about century marks. So 4,100 would be a century mark. If I were going to take a short trade off of a sell signal, I don't want to put it right above a century mark, because often we'll find if we're trading above it currently, like we are, we'll find support at that level. So I don't want to place it. So I probably, this is more of a guide than a, hey, do this. This is the exact price you have to get in at. So if I were to take a short trade off this sell signal, I'd actually want to put my sell stop order below 4,100, because I know that these century marks often serve as strong support and resistance. So, I'm maybe more apt to, place it a bit lower, if I wanted to take a sell trade off of this sell signal below 4,100. So I might go, down to like 41 or 40.97 or, a bit lower, so I can get below the support. And that way, if price does come down into 4,100, and again, we just looked at the probability of touching that level, which is pretty high, and find support there and then reverses, then, we don't get into a trade on that. So if, 4,100 support, buyers come in at that level, we're not going to get in. So I want to, place my sell stop far enough below 4,100 that, or, I could even wait and see, tomorrow or over the coming days, if we get a close below 4,100, and just make a note to myself, maybe add this to my watch list of things that I'm keeping an eye on, and take a more prudent, conservative approach and wait for a close below 4,100 for the confirmation, that this sell signal might, have legs behind it, and being that it's off this resistance zone, have more room to run down into the previous levels of support that we mapped out, like 4,000. So that's kind of how we analyze these signals. So let's take a look at a couple other examples here. Let's look at Accenture. Right, and also you'll notice, like in the Zillion platform, when we run a scan here, there's a number in the pending arrow. So we've got a down arrow and it's yellow. That means that it's still a pending signal. It hasn't hit the trigger price. If it were red, then it means that it's hit the trigger price. And here, like in the buy, you can see that these three right here have hit the buy trigger price. This one hasn't, it's still yellow. And it tells you how many days ago either that pending sell signal came in or how many days ago it hit the entry price. So these are all still pending. And again, we can sort that. If we want to look for actual triggered entries, we can select the entry sort. And then the number inside, again, is telling you how many days ago that occurred. So when we see like a 1, like we do here with Accenture, that just means that this occurred today. Right, and see, there's the sell signal, right? So looks very similar to the S&P chart, right? This is now a daily chart of Accenture, right? So we get the sell signal. We've got resistance here around 312. And so again, what am I looking for? So we're just basically running the same exercise we just did on the majors, on the S&P and the NASDAQ. So I'm looking for prior resistance and or support and big moves off of this level. So notice the last time price came into this resistance level, it came in from the downside. So it approached this level from a lower price, came up into it, and then sold off. All right. And this is actually a major support zone down here. We've retested it several times. And then price came back up into that level. So, this is what I'm, again, looking for, and not a recommendation to sell Accenture, but there is a current sell signal at a resistance level. So that's what I'm looking for. So if I were to take a trade off of this, I'm looking for price to follow through into the suggested entry price to the short side. And let's, again, get out of the chart and see what the suggested sell entry price is, 307.18. All right, so then now that I have my suggested entry price for a sell signal, 307.18, I want to look at that level and make sure I'm not trading into any support. Because if I were to take a short trade, right, I'm going short, I don't want to trade into a support level. And I also want to, again, run the exercise we did on the majors, the S&P and the NASDAQ, to find other levels, lower levels of support to see if I do get, filled on a short trade and there's follow through on the sell signal, where might I encounter potential buyers coming into the market? And so that's what I'm looking for, as well, as part of my initial trading plan and analysis, as well as if I get into an actual trade, I'm going to be mapping these out and monitoring them. So this is a major support level, which resides, let's see, right around 301.84. To see how previous support, resistance, support. All right, so that kind of helps me gauge how much room this might have to run before I encounter some significant support or buyers coming into the market, right? So, if I were to get into the suggested entry price from the algorithm, how much might I, potential might I have to pick up in terms of points or profit before I encounter any technical support, and where price could, potentially rotate off that and move back up. And then also, if the stock or the security is optionable, I want to look at probabilities just like we did earlier. So I might go over to the options chain for Accenture. And if I were to take a short trade off of this, and I identified there's support around 301, let's just say 301.75. I may need to adjust that based on available strike prices. I might even use 302.50 because there's not a 301.75 strike or even a 301.50. I might want to look at what is my probability of touching that price if that's my profit target, right? I got a 40% chance. So the odds are actually against me for Accenture moving down into the support level that I identified. So see how I'm kind of analyzing probabilities and using them in combination with support in the context of a sell signal, or I would do the same using the call option statistics for a long trade off of support into resistance, because I'd be going long, what are my probabilities of touching the next resistance level that I identify? And that can, if I'm going to use that as a profit target level, kind of help me gauge the probability of my trade being successful. So only 40%, and this could very well move into this level, the 302.50, and I could pick up, what did we say the entry was? I think it was 306 something, 302. So I could maybe pick up 4 points to the downside if I get a move into the support level, but I only have about a 40% chance of that happening. That doesn't mean there's a 40% chance of me losing money or the trade being a success or failure, because I could get a move in the anticipated direction. And maybe after I move halfway between the entry price and the anticipated profit target level, I move my stop to break even, right? So there's other things we can do to manage it in the interim, but I just want to basically know, from the start, what are my probabilities of touching my profit target level? And that's why I largely trade optionable securities, because I can use the option statistics to tell me that. And it's pretty cool. I mean, you can know, they're not obviously perfect and they're not always obeyed, but over the long run, as we're making these trading decisions, they tend to, average out. So it's kind of like flipping a coin. You can flip, a coin and get 5 heads in a row or 5 tails in a row. But if you only flip it 5 times, it's not going to, the probabilities aren't going to pan out over a short number of occurrences. But, if you flip a coin 100 times, you're going to get pretty close to 50% heads and 50% tails. So over the long run, that's kind of how option statistics pan out. So when we use those, they might be skewed on one individual trade, but over the long run, they're actually fairly accurate. So I only have a 40% chance of hitting my profit target level. I might look elsewhere. It's just not quite enough of an edge for me, even though this is a sell signal off a resistance zone. But maybe just not quite the edge I'm looking for in terms of probabilities. But we have a lot of opportunities. I mean, we actually got 130 pending sell signals, right? So we've got a lot of opportunities, but we could spend a lot of time looking through these different opportunities and running probability statistics on them and analyzing the charts for key levels. But that's kind of the process I wanted to demonstrate and look at in the context of our algorithmic signals for TradeTrend, so you guys can kind of get a feel. Let's see, Martha's asking, can you show us the option chain again to see where the yeah, let me do that. So Martha's asking, can I show how I determine the probability of touching the 30250 price, which is, the lower than the current price for Accenture. So I went over and pulled up, and by the way, this was purely within this week, right? So we can select different expirations based on our time horizon. Maybe I'm willing to, if I'm going to take a short trade off of this sell signal on Accenture, maybe my time horizon is longer. Maybe I'm willing to stay in this trade for, let's say, a couple of weeks or more. Then I might go out to the August 26th expiration. So let's use that one. And there we're going to start finding higher probabilities of touching a price. So what I did, Martha, is I'm using the options chain. So again, step number one when you run this analysis is you want to determine your time horizon. How long do you anticipate it might take for a security to reach a profit target level? How long are you willing to tie up capital or be in the trade? So those are, important decisions, individual decisions you'll have to make for yourself before you, obviously place the trade. So that would be the first question to ask yourself. And that's how you're going to select your expiration. So let's say, previously we looked at this Friday's expiration as an example. That's only 3 days away. So obviously between now and Friday, there's going to be a lower chance of hitting a certain lower price versus if we go further out where a lot more can happen in 17 days instead of, 3 days. So let's look at, I'll show you how I got that. This isn't the Thinkorswim platform. But most options platforms, even if you don't have options approval or trade options, and I tell a lot of our members this, that you don't have to trade options to use this really valuable information. Even if you're trading the stock, we coach our members to use options information for setting entries and profit target levels and managing open trades. So let's say I go out, to the August 26th expiration, and I want to know what's the chance of Accenture trading down to $302.50 per share. So in the Thinkorswim platform, I'll show you how you can find this. There's a column you can add to your options chain called probability of touch. So what that means, again, is basically what is the probability of that stock touching that price between now and August 26th. And that probability is almost 70%. So now I've got a better chance. I've got an edge if I'm willing to stay in a short position between now and August 26th, 17 days from now. With the realization, a lot of things could happen. I could get in a short trade, and that also gives it more time to prove me wrong. So I really want to be looking at, the probability here of something happening as it relates to my trading plan. So 70%, that's a pretty good chance. 7 out of 10 times, I'm going to hit my profit target if I'm using, the same approach. So that's where it's found. It's probability touch. I can show you real quick how to add it. I can't provide obviously support for all charting and broker platforms. So you may need to check with your broker how to add this if you're using a different broker to your options chain. So in Thinkorswim, I can do it from here. May see. Wondering if it'll let me do it from there. Probably won't from there. I was going to try to show you from the settings, but you can do it basically from over here. So you'll notice that over on the left side of the options chain, there's a layout feature, and it's a drop-down box. So that's probably the easiest way to configure your options chain. So you'll click on the drop-down box, and then you can hit customize. All right, and it's going to bring up a window that lets you add different statistics and things about the options chain to your chain, because it's not going to probably default to that. So you notice here I've got probability of touching. So you can just look that up here in the available items. So you can look at probability of a certain price being in the money at expiration, out of the money at expiration, or the price, the security touching a certain price by expiration. So that's what we're looking at. So you can select that and click add items, and it will add it into your current set so that you can see it on your options chain. And then you just, go ahead and hit OK, and it should show up in your options chain. Again, that's on the Thinkorswim platform. You may need to check with your individual broker or charting platform, or, assuming you have access to options data to determine that, how to do that. But very handy tool, very handy information. And I use it in virtually all of my trading and investing decisions. I want to know ahead of time what my probabilities are. And that can help me determine my probability of success if I'm using that as a profit target level. And I, do it in the context of my time horizon. With the realization, a lot can happen between now and August 26th. So the further out you go, your chance of touching a potential price may go up, but it also increases the time that you're in the trade, your capital being tied up, and your risk. So always, take those things into consideration. Let's see. Yeah, no problem. I'm not sure, Martha, what the percent touch is. You may need to check on that one. Yeah, it sounds like it's only slightly different. So it's probably the correct one. Boris, so probabilities with options are largely based around the Black-Scholes model. It's how options are priced. I think they actually won a Nobel Prize for Black-Scholes creating that model. You can look it up, Google it. It's incredibly complex, but all these probabilities and things are based off of that. How gospel are these numbers? Again, they're on any individual basis. It's just like any other thing in trading. Things can get skewed, and not just trading, any statistical thing can get skewed with small numbers of occurrences. So on any individual trade, can it be violated and not pan out? Absolutely. So I use them as a long-term over many occurrences. And I always say this, probably beating a dead horse, but that's why we call it trading and not trade. We're trading, so we have a lot of occurrences for probabilities and statistics to pan out, to play out. So over the long term, over a series of many trades, I think it is quote unquote gospel. I think it's very, very accurate over the long term, and it's proven that historically. If you look at option statistics historically, they tend to be accurate over a large number of occurrences in a long period of time. Over one particular trade, they can become more skewed. Okay, yeah, definitely on Tastyworks. Tastyworks is actually, I've never traded off the platform, but obviously, developed by Tom Sosnoff, who was one of the major developers of the Thinkorswim platform, has incorporated a lot of these things into Tastyworks as well. So definitely has that. All right, so we're just right up on the hour. Hopefully you guys got some good tips and tricks out of the session tonight. I want to give you guys a little bit of time if there are any particular stocks or ETFs or anything you guys want to look at. Go ahead and put those in the chat or the Q&A, and we can spend a little, take a couple of suggestions and take a look at those. If you don't have any, no worries. We can always, if you think of anything between now and next Tuesday, take a look at those. Let's see, Eric's asking for Amazon. All right, let's take a look at Amazon. Let's see here. Go over to our charts. All right. So with Amazon, we actually had a triggered buy. It looks like it kind of got out at break even. And you'll notice that it came up into this resistance level. So even when these signal, and this is one I would have avoided. So this was a buy because it was into a resistance zone. Again, as I mentioned earlier, we don't want to take buys into resistance zones or sells into support zones. We want to, and that's the importance again of mapping these levels out prior to entering a trade. This one still did run quite a bit before it reversed, but the trailing stop algorithm took it out probably right around a break even. So even when these don't work out, if you're using the trailing stop algorithm, which are the red horizontal lines, they tend to get us out before a reversal. This one seems to be kind of reversing lower. Overall, the trend's up, and we are still above a strong support level, kind of right around 135 on Amazon. So that's the one I'd really be watching. Let's actually see what the more precise level is. The low here was 135.35. This one dipped below, but still closed above the 135 level. So I'd be watching 135 on Amazon for support because we closed above it today. There's another instance of support. And then we had a gap below the support zone. So I'd be watching this support zone for price action to tell us, whether we continue to use it as support and then close back above it. So I'd want to see, price close back up out of this zone, preferably above 138. Or are we going to close below it? In which case I might look for, currently there's no TradeTrend signal on Amazon on the daily chart, but I might look for, if price goes below it, for a retest of this 135 level. And then if a sell signal comes in from TradeTrend, that's when I would look at, personally, if I were going to trade this, look at trading as a higher probability short setup. All this is hypothetical and assuming that occurs, but we've got some room to run. There's strong resistance around 129. Let's see what the high this reversal candle was. Almost right at 129, 128.99. So pretty much at 129. So, depending on where the price action ends up, if that were to happen, we got to close below this resistance zone. I've got, some room down into the 129 level to gauge my profit opportunity, and then maybe use that 129 as a profit target and look at the options stats to see what the chance of hitting that level between now and a particular point in the future. Yeah, thanks for suggesting that one, Eric. Overall, more medium term, stock is looking bullish, and we're, as long as we're above this support level around 135, I think that is kind of more bullish for the stock. All right, well, it looks like that was the only suggestion for tonight. So if you guys have any others, bring them to the table next week. We'll be back next Tuesday, 7 p.m. Eastern time. If there aren't any final questions, I want to wish you guys a great rest of the trading week. Thank you, Mirtha. Thanks, Eric, and everybody for participating and asking great questions. If you have any questions you think, if you're like me, 10 minutes from now, you'll be like, dang it, why didn't I ask that 20 minutes ago? Just thought of it. No problem. Email us support@altostrading.com, and happy to help you guys with anything you need. And then, of course, we'll be back next Tuesday, 7 p.m. Eastern, and hope to see all of you back. And we'll have the recording for tonight's event up in our YouTube channel within the next day or two as well. So take care, everybody. Hope you have a great rest of the week.